Today, we will talk about industrial banks or loan companies, overview and criticism. An industrial bank, also known as an industrial loan company, is a financial institution that is state-chartered and is usually owned by a commercial firm. Unlike traditional banks, industrial banks are not regulated by a federal banking agency. They accept customer deposits and provide loans for consumers and small businesses. Industrial banks are regulated by state regulators and the Federal Deposit Insurance Corporation. They can be owned by companies and are not subject to some of the regulations that govern traditional banks, such as the Bank Holding Company Act. This lack of regulation has led to controversy, as it allows financial technology and investment companies to apply for industrial bank charters. There has been widespread opposition and protests against industrial banks, especially when non-financial companies have sought to form industrial banks. Walmart incorporated its application to form a new industrial bank in 2005, for example, was met with resistance from commercial banks and financial regulators. Similarly, lobbyists have called for a moratorium on providing federal deposit insurance to industrial banks and have introduced bills to end the ability of non-financial companies to form industrial banks. Here are 3 key takeaways. 1. An industrial bank, also referred to as an industrial loan company, ILC, is a state-chartered, financial institution, usually owned by a commercial firm, that is not regulated by a federal banking agency. 2. Industrial banks are only chartered by a few states. The state of Utah provides the majority of charters for industrial banks in the U.S. 3. Industrial banks have become controversial because they allow non-financial companies to offer banking services without oversight by the Federal Reserve. Hope this would help. Thanks for watching.